Hello, good people. Welcome back to Talk Stocks with me and this series titled Technical Analysis for Beginners. Here's the outline of the topics which I intend to review in this series. The plan is to have one video for each topic with demonstrations also on TradingView. Today's topic, as highlighted in the slide, is called Support and Resistance. And in this video, I will introduce you to an AI-based indicator on TradingView that helps in drawing these key regions on our charts. Before I begin, I would like to give a disclaimer. I am not a financial advisor. The content of my videos represents my personal opinions and is provided for informational and entertainment purposes only. This information is not intended to be legal, financial, or an investment advice. Please always conduct your own research and due diligence before making any financial decisions. Remember, it's your money. Please make informed decisions that are right for you. Remember, I will never ask you for money, nor will I provide my phone number or my personal email address. If you encounter any suspicious accounts or messages claiming to be me, please report them immediately as fake or scam accounts. Thank you. So let's get into the video. Join me now on the TradingView landing page. To access this page, you type in www.tradingview.com, and once you are on this page, kindly proceed to the Products tab and click Super Charts. That will take you to the charting tool of TradingView, and this is where we are going to be performing all our technical analysis in this series. On the chart here, you can see the price action for NVDA. So to access NVDA, you type NVDA here. And this is Nvidia Corporation that is listed in the Nasdaq Stock Exchange. Remember, once you, on your own version of TradingView, you would have a white canvas. And to change the color to the dark theme, which is what I like, you come here and you click on and you toggle on the dark theme button. So if you toggle again, it goes to the black screen. And this is the screen I like to work on because of my eyes, like I said in my earlier video. Straight away, this charting diagram here, on the y-axis you have price, and on the x-axis you have time. So you can see on the screen it ranges from 2015 to 2025, and you can pan to the left. So that means you are going backwards in time. You see, you're going backwards in time as far as you have price action, and you can also pan towards the right. I'm working on the monthly time frame as highlighted here. If I wanted to go to the week, I'll just click on week, and if I want to go to the daily time frame, I'll click on the daily time frame. I'll proceed back to the weekly time frame. Remember, we have the green candles and we have the red candles. The green candles are called bullish candles and the red candles are called bearish candles. The numbers or the values corresponding to each candle is shown up here on the canvas. So if you go to the green candle, you can see the O, which stands for open price, H, which stands for the high of that day, of that week, L for the low of that week, and C, the closing price of that week. And in parentheses here, like you can see, in this week, this share price lost approximately 4% in that week. So that's just how to read these candles. Reading candles, interpreting candles, identifying the types of candles in a chart is another topic which I hope to cover as the last video in this series because it's more involved and it's more technical. Now on this chart, I'm going to work on the monthly chart. I'll go back here and I click on the monthly time chart. Now, as a trader and investor, the reason why I buy a stock or any financial instrument, especially if I have a bullish bias, is because I believe if I buy this stock at this price, due to some analysis that I've performed, maybe fundamental or technical, I believe that the price is going to go up. Interestingly, as you can see in this diagram, stocks don't go up in a straight line. They don't. They actually have a wave-like behavior. So if I go to the lower time frame, like in the weekly time frame, you're going to see that stocks go wave up, wave down, wave up, wave down, wave up, wave down, wave up. So stocks don't go in a straight line, just like when you're driving a car from point A to point B. Look at it. Once you start trading or investing, expect volatility in the market. It is healthy because in this type of price actions, this is when people like us want to buy at the break of pullback. Today's video is titled Support and Resistance. And when you look at the price action, like I said, the price of a stock goes in waves. Now, in reality, it's just like when you are driving a car, there are bumps on the roadway, especially from where I come from in Africa. The road are not just smooth. Now, support and resistance is a form of, I kind of approximate it to the bumps on the way. So when you buy a stock, you expect there to be bumps on the way. And support and resistance are kind of like a metaphor for the bumps on the way when you buy a stock price. Those bumps on the way actually refers to sellers, where sellers are, where they are waiting to take profit, or where they are waiting to reverse the price action. And now I'm going to show you how you can identify those regions on TradingView. In the past, technical analysis to involve experts using their eyes to actually look for such regions of reversal on the chart. So for instance, they start from the most recent price action and they look to where there is a recent reversal. So you can see here the price was going down and all of a sudden it reversed and it went up. So they will actually mark here as some form of a reversal point. Similarly, here where the price reversed from going up to down, they will also mark here as a reversal point. But due to technology and the advance of technology, I'm going to introduce today an AI tool that was going to help us to mark these regions on the chart. However, before marking these regions, it's important to understand how or where you are going to start putting these regions on the chart. Whenever you want to buy any stock or any financial instrument, it's important that you get the big picture of the stock. You want to, just like when you are dating a girl, before you kind of approach her, you want to kind of step back and look at her from afar, and just kind of look at how she looks. So that's the same way it is when you want to invest or trade in any financial instruments. It's important that you look at that big picture, and the best way to capture that big picture is in the monthly time frame. So I'm going to move here and click on the monthly time frame, and now I'm waiting for the monthly time frame to load, and I think it's still loading. So let's just wait. Now this is the monthly. This is the price action in the monthly time frame. Now we can see the big picture of this stock. You can see that this stock initially was, it's just because of the scale. That's why it looks folded. But I'm sure if we expand the scale, you will see that there was actually some price appreciation here. But in general, you can see that this stock has done so well for early investors. So now this is the big picture of this stock. And now this is where we are going to first establish our key levels. So key levels are the support and resistance region. So ideally, you want to mark those regions on the monthly time frame, and then you go to the weekly time frame. So we are going to go to the indicators pane here and search for support, and this is it here. So you're going to search for support and resistance AI. So this is artificial intelligence, and it uses the k-means clustering method. So k-means clustering is a form of unsupervised machine learning model where it groups the data set into clusters. So clusters that belong together are aggregated together. And I'll click on it, and here I'll make sure that it is the script provided by Think Logic AI. The number here shows you the number of TradingView users that also have downloaded the script or use it in their account. So now, once it's here, if you want to make sure that it becomes frequent in this page, you click on this star here. So this adds it to your favorites, and which you will have to do going forward. So then once you add it to your favorites, you click on it, and you close this interface. You see, and this is now the support. These are the key regions at the monthly time frame. This is using AI, and here you can see that this is the distribution, and it's telling you that most 85% of the price actions were in this blue region. So here, so in the monthly time frame, you see 85% of the price action was in this cluster, the third cluster. 10% of the price action was in cluster 2, and 3% is in cluster 1. So you can also adjust the number of clusters you want. So to do that, you come here where this cluster settings is, and you come to the settings here. You see here, so the first icon here will hide it, will take it away from your chart. So if you want to bring it back, you click this. Now this is the settings. This is the settings button here. And so when you click on settings, you have the style, you have the visibility, and you also have the input. So here you can define the number of clusters that you want the machine learning algorithm at the back end to create clusters for. I typically like to go with 3 clusters across all time frames. So I'm going to leave it at the default. But if you want to increase, you can just increase it from here. So if you want 4, you increase it to 4 and you press OK. And the algorithm is going to repopulate, and you can see now it has 4 clusters. And again, their definitions are here. 79% of the time the price action was here, 13% it was here, 4% it was here, and 3.6 it was here. So I'll return back to 3 clusters because I think based on my past history or past studies, I've seen 3 to work effectively. And so now that these key levels have been marked on my chart, the next thing I do is to come to my tools, my drawing tools, and I look for a horizontal line. So you can see the horizontal line here. I click on it, and then because I need to mark these regions so that I can take away this indicator. So now what I'm going to do is I'm going to mark these regions. I typically mark the key levels on the monthly time frame with white. So now I'm going to change this to white, and I like to use the dotted line. So now that has been set, I move to the other one. I click it again. I click it also here. And typically, you don't have to mark all these key levels. The reason why is because the price action is over here. So I really don't want, or I don't really care about what is happening here. I really care what is happening here because I don't want to hold this stock even past this level, past this range. So what happens is that just look at, you are in a house. Just look at you have 4-story buildings. You know, typically a stock moves between trading ranges. So just assume in this building you have 3 floors. This is the first floor, second floor, third floor. Typically, stock movement occurs in a trading range. So at first it was trading within this range, and eventually, so let me explain it a little bit easier. So just look at pretend as if this is the ground and this is the ceiling, or this is the ceiling. So typically the price moves within that range, and eventually this acts like a ceiling. So the instrument is stuck between this space. When it gains enough momentum, it's going to break through, and this is what we call a breakthrough. And you see, so next is trading within this range, and also you see it's trying to break, it returns here, acts as support. So this is where the support comes into place, and this is what is called resistance. You see it's trying to break through here, but this is acting as a resistance. It returns back here. Now this is support, and you see it's trying to break through and eventually breaks through. So now this region becomes, which was resistance before, becomes support, and you see it keeps. So this is how the stock moves. It moves, stocks move between support and resistance and between trading ranges. So right now this stock is trading within this range, and previously this was resistance, but right now you can see that the stock price has broken out of this resistance, and this line is now actually has support. So I'm just going to continue marking the line. So if I want to see what I've done so far, I'm going to hide it. Good. So this is enough. I only care about this region right now in the monthly time frame, because I don't want to be marking my price, because I'm not even going to be, I don't want to be in this position when price goes below this key level here. So now that I have my key levels marked at the monthly time frame, the next step is to mark the key levels at the weekly time frame. Remember, I am going from a higher level to much more lower level. So basically my granularity is decreasing. So now I'm going to come here and switch this to the weekly time frame. Now I'm in the weekly time frame, and the chart has also changed. So the next thing I need to do is also to release my eye so that the algorithm will run at the back end and also create my key levels. So I'm going to show it now, and you see now it has also marked 3 key levels for me. And right out the back you can see that this region here had 68% of the price action. So this is a very powerful, this was a powerful key level, but right now we are trading this level. So again, I'll come to my tool here, mark it at this region here. Now I'm going to distinguish my monthly and key levels. I'm going to use yellow here. That's my conversion. You can use whatever you're comfortable with, but that's what I've been doing since after working on the chart. I'm also going to mark here. I'm going to take it again. I'm going to mark here, and although I said I don't care about here, but I'll just mark one more point after this, just has the last key level that I care about. And now I've marked my key levels at the monthly and at the weekly time frame. Now I'm going to close this, and I'm going to actually close it, not actually hide it this time. So I'm going to close it. Now I've marked my key levels on the chart. Now, another step I usually do is that when the key levels are close to each other, it kind of means that it's like a region. So I need to also say that again. This, although is a line, it's actually a region. So it means when this 5960 level, so is the key level. So even though it's showing 59.1, it's actually not a line, it's a region. And to kind of portray that on the chart, I'm going to use this tool here. You're going to come here to look for the flat and top bottom. So what I do is that key levels that are close to each other, I kind of make them look like an actual region. So I come here, I've clicked on that, and now you see I'm going to mark this. I'm going to move it as wide as I want, and I'm going to, you see, I'm just combining both regions so that I know that this is a region now. This is a little bit close to. I'm going to do the same here. See that? I'm going to move to this. I'm going to mark it. I'm going to do the same. It's close. That's no point looking at them as separate regions. I'll just make them one. Yes. And now this is my key levels marked on the NVIDIA chart. And with this, I can even decide to go into the daily time frame to see how these regions hold. And I've gone to the day, and you can see. Let me just explain it before we wrap up this video. This is the price action here, moving up due to buyers being in control of the market. And now if we look here, the price reached this region and it was able to break through. And so previously this was resistance, but when it broke through this region, it turns to support. And how it becomes support is that once it breaks through, sometimes it can be a false breakout. And so that means that once it breaks out, it's going to want to fall back. But once this region holds, you see, and that's what happened here. It held, and now this resistance becomes support. And so what some people do is that once this resistance becomes support, they actually put a long trade, that means buy, and they set their stop loss somewhere below here, so that if this key level, if that support region fails, then they can get out of the position. But if it holds, then they can ride the price action high. Now, at this key level, you can see that the price several times, you see, it attempted to break through, but you see, it got rejected. It tried to break through for several days. It's kind of choppy. You see, it got rejected. It went back. The buyers took it up. You see it again struggling here at this key level. In this case, it's a resistance, and and eventually on this day it gapped up, and you can actually see this day corresponded to an earnings, and so that's how you can see. If you see the earnings, perhaps you can actually see they had an earnings surprise of 9.17. So this was like excitement to the market participants, and the price gapped. Broke through that level. And if I just add the volume, let's see what happened at that volume. You can also see that on this day, you see the volume, you see how compared to the previous day, you see how the volume, how there was a spike in the volume. So this also confirms a breakout, that this is a valid breakout, because it is confirmed by the huge spike in volume. So I'm just going to close the volume again, just so that you don't get confused. And you see it approached another region, went choppy, it broke out again. And so typically this is what happens in the chart. Yes, you are buying a stock because it's a point A, it's going to point B, but it's not going to go there straight. Once you have these regions marked, you expect, when you are monitoring your position, you expect that there will be pause. So once you get to resistance, the price action either pauses or it reverses. That's what you expect. You don't expect it to just jump out. No, this is what brings sanity into the market. Participants respect these key levels. In this video, I've explained what key levels are, that is the support and the resistance regions. I've introduced you on at which time frames you need to draw them. You start at the monthly and then proceed to the weekly. You don't necessarily have to draw them on the daily time frame, except you're a day trader. I am more of a swing trader, and I mostly use the weekly time frame to establish my regions, as long as the monthly time frame. I've also introduced how to identify support and resistance regions on the chart using the free AI indicator on TradingView that uses unsupervised machine learning, in particular the k-means clustering algorithm. I also introduced you on how you can play with the number of clusters, so by just increasing it to 3, 4, 5, but I suggest you proceed with 3. I also kind of described how market participants usually use these regions, which are the support regions, to implement long trades. So where once they see that the support region is confirmed, they kind of set a long trade there. Once they have another bias, they have some other reason why they believe the stock price is going to go up, so they set their long position there and set the stop loss below the support region. Also, some traders also use the resistance region as a kind of anchor for shorting that price, because they have the expectation that when price reaches that resistance region, it either stalls or it reverses. So the support and resistance regions are usually used for planning long and short trades. Remember, when you are trading stocks, it's probability. So you have a higher probability of success when you implement your position, or you went in this type of regions, either in the regions of support or resistance, rather than any random location in between both regions. As the next steps, I implore you to also get on your TradingView and start using that indicator. Take any stock of interest, start on the monthly time frame, set up your key regions, and then proceed to the weekly time frame, and also implement the key regions, and then just try and see how these regions are actually valid. Once again, I want to thank you for your time. Please don't forget to subscribe to the channel if you haven't, and thank you for everyone who has subscribed so far. And please smash the like button, and I also look forward to hearing your comments in the comment section. Please, I'm excited to hear your comments, your feedback, and I promise that I would get back to each and every one of your comments. Until next time, bye everyone.